Good afternoon, fellow Cashflow builders. It's been about 2 weeks since I did my last live, and I spent a bit of time going to KL to visit some relatives as well as visit Penang. And if you're thinking of visiting Malaysia anytime soon, it's pretty convenient to go now. Very smooth. When I flew over by SQ and even did an internal flight using Malaysia Airlines, right? Very smooth as well. So yep, all's well. Had a little bit of scare. Have started to have a little bit of cough and phlegm over there. So, but I tested myself and fortunately negative. So came back smoothly as well. I think it was because all the good food and a few late nights here and there. So so that's that. And I'm very excited to do this again, this live, especially after looking at the market over the past 2.5 weeks. Pretty interesting performance by the Chinese market over the past 2.5 weeks compared to the rest of the markets. And these are conversations that I have with myself every day while looking at the charts to understand more about investors' sentiments, and that can possibly let me know whether to stay in the market, get out, or get back in, dollar cost average, so on and so forth. Based on a little insight on the sentiments that investors have about the market. So this is not financial advice, just conversations, and I want to make this available to all of you so that if you're having these conversations on your own as well and you start to get bored, right? Come forward, let's have conversations together. It always helps to have to know more about the market. So let's go. So yesterday's market pretty good mix of results. Nasdaq did the best, S&P 500 also in the green, Dow not so, and the New York Stock Exchange in the red. Volatility index has also gone up to 27 points. It has stayed nicely below 30 for the past few weeks. We will look at that later. So looking at the what happened in my charts? Yes, sector summary, right? So most of the sectors are red. Nice, a decent climb for technology and consumer discretionary, where we're looking at automobiles as well as luxury goods. So looking at one of my favorite charts, the volatility index or VIX. So as we can see that the VIX had stayed, below its actually has stayed above its short-term moving average indicated by the blue line for quite a while, for the past 2 months, and occasionally gone below the short-term moving average. Looking at the way it has increased yesterday, we had including the weekend, there was, and 4th of July, not much has happened to the market. And since market opened yesterday, the volatility index has gone up to 27 points. But actually, if you look at the candlestick, the wick, it had actually gone up above its short-term moving average. Now, that is an indication of, when volatility index goes up, there is an increase in the purchase of put options. So investors purchase put options when they have, they have worries about the market taking a plunge. So it had actually shot up to close to 30 points, 29.7 points yesterday. So that's an indication, that could be a possible indication of investors, not customers, investors' concerns about the market, that or a negative sentiment about the market. So of course, let's look at the volume of the ratio of put to call options as well, because as much as the volatility index going up, telling us that the volume of put options being purchased has increased, right? We also want to know what about call options purchases, right? So has it been updated yet? It's not updated yet. So put call option ratio is usually updated pretty later in the day or over here in Singapore. So if you use this ratio, please have a look at it later to have an idea of whether call options purchase has increased as well, or maybe even decreased. So if it decreases, there will be a very sharp black line towards the upside for the call put ratio chart, which can give you an indication that investor sentiments is moving more towards the negative. So now looking at the interest rates, it's still falling. It's still staying below 3%. That could be giving investors confidence to stay in the market. That means when they purchase their investment, they stay invested and possibly purchase more, which is what we want to see. The possibility of the market swinging towards the upside. Looking at the bull bear ratio, where the green is indicating the bull, the volume of bullish investors rate the volume of bearish investors. The ratio is still at 0.49, meaning that for every one bullish investor, there are two bearish investors. Now moving to securities, S&P 500 is still below its short-term moving average indicated by the blue line. So when I say that the price of the security is still below its short-term moving average, it's what we see here, right? Like the candlesticks are below the blue line. So usually investors are looking for the price of the security moving above the short-term moving average. When that happens, it gives investors more confidence to stay invested and to purchase more. So at the same time, investors sometimes look for the crossing of the short-term moving average, crossing over its longer-term moving averages. So in this case, the blue line is a 50-day moving average. The red line is the 100-day moving average, and the green line is the 200-day moving average. So being the 50-day moving average, of course, it is a short-term moving average. Investors are also hoping to see the short-term moving average getting closer to any one of the longer-term moving averages and possibly crossing over. That will give investors confidence, but as we can see here, it's not getting anywhere closer yet. All right. So yeah. So is the S&P 500 bottoming out yet? We don't know. Is the federal government still interested in increasing interest rates, hiking up interest rates? Yes. Inflation is still going on, so that there's still a strong need to combat inflation. So if you intend to get back into the market, please dollar cost average. So looking at triple Q, which is US large cap and technology stocks, very good climb, but still below the short-term moving average for the triple Q. So yeah, if you are comfortable and you think that it's pretty much the bottom at the moment, please consider dollar cost average while you are raising and continue to raise cash, right? It's a very good discount. It's also looking like it's getting closer. That means the price of the security looks like it's getting closer to the short-term moving average. Short-term moving average is still very far from its longer-term moving average. So, if you're feeling confident, please consider dollar cost average instead of pouring everything into the triple Q or US stocks or even technology funds. So looking at energy, very interesting, right? If you have been paying attention to energy, very interesting plunge. It's fallen below its short-term moving average. It's getting closer to falling below its long-term moving average, which can have a huge impact on investor sentiments, investors who are invested in energy. So, if you have been investing in energy, hopefully you have been averaging out of your investments, right? So let's look at C triple Q, which is the most interesting one of all the lot, right? Where China's triple Q, China's large cap and technology stocks, has been above its short-term moving average for ever since mid of May. That's very amazing. And when the price of the security stays above its short-term moving average, it does give investors very strong confidence to stay invested and to invest some more. It even went pretty close to its long-term moving average, its 200-day moving average, which of course will give investors even more confidence to stay invested and invest some more. What could possibly be contributing to this kind of performance would be, ever since Shanghai opened up, Guangzhou, I hear from my friends who fly like the SQ, that they do flights to Guangzhou. So with major cities like that opening up, it gives investors confidence, even investors who are in China as well, to stay invested and to invest some more. It could also be possibly due to China being able to maintain a low interest rate despite the rest of the world increasing their interests, right? So maintaining borrowed money is still affordable to investors. So that could mean that investors there are still pretty cash rich, So again, seeing this performance in China, giving you confidence to invest, um, again, is there anything really solid to back the companies in China? Because everywhere is still facing supply chain issues. So, you know, dollar cost average, basically. Don't pour everything into this as well, right? So, overall, for the Chinese security, is it still at a discount? It is, right? So, let's look at 2020, ever since March 2020, right, till today, March, right? So the Chinese securities is still at a very good discount, right? Just again, in light of its wonderful performance for for the past 1.5 months, please consider dollar cost averaging. Yes. So cool. Thank you all for joining me in today's live session and to look at what the charts could be saying to us. And if you're having these conversations on your own and there are some things that I've not covered and you would like me to cover, so please DM me on Facebook, Instagram, or even LinkedIn, and and I'll cover those. So once again, thank you for joining me on this live session. Stay safe, stay invested. Take care, everybody. See you in the next one. Bye.